Hi, welcome to this Chapter 4 snippet. What I'm going to do is share my screen. I want to kind of show you um, what I have done, and I've done it in advance just because I wanted to make sure that this was as efficient as possible. So I did a Google search here of adjusted trial balance example, and I found this one. We're gonna use it, but there's only a couple things we're gonna have to kind of adjust here. Common stock is a equity account that we're gonna learn about in Accounting 112, and dividends is also a something we pay out as a corporation. Both of these are for corporations. So what we're gonna do is we're gonna call common stock our owner's capital account and dividends as our withdrawals because they function the exact same way, and they're essentially the same thing, just from the corporate standpoint. So I have already saved that image, but what I'm going to do is I'm going to open this image into a Paint program, and I'm going to pull it up alongside an Excel spreadsheet. Okay, so here is that same account here, and let's pull up. Um, Sorry, I'm clearing the contents of this Excel so that we can use it. Okay, here we go. So what I want to do first to start off is when you're given an adjusted trial balance, it's our responsibility at this point to, and this snippet we're going to deal with right here is going to deal with doing our closing entries. Okay. So remember our first, and I'm going to pull up a different sheet here and rename it closing entries. I can spell. You know what? Actually, I don't care. All right. So which ones of these accounts are we going to look at for closing? All right. Remember, our closing ones are temporary accounts, and our temporary accounts are anything but a balance sheet account. Balance sheets are assets, liabilities, and our owner's capital account. Cash is an asset. Accounts receivable, asset. All these are assets until you get to accounts payable. That's liability. Unearned revenue is liability. Then we get to our common stock, which is our capital account. Then dividends, remember, is withdrawals. In fact, let me just do that on here real quick. Let me just go like this. Oh, look at that. I love it. I love paint. I don't know, people think paint's this crude tool, but it's kind of cool. So we're just going to change these so that there's no more question or concern here. Sorry for the little bit of a delay in this video. And then I'm going to go ahead and do this. And we're going to do owners, capital, owners, withdrawal, draw. I think that's right. Okay. So there we go. Now I fixed it. Yay. So we're going to close everything from owner's withdrawal down, all right? We're starting off with our revenues and our expenses. So our first journal entry that we're going to focus on here, and let me go ahead and zoom in, is that we're going to close revenue accounts. And remember, our normal balance on our revenue accounts are listed here on the adjusted trial balance as credits. So in order to close them, we need to debit them with the same amount that's in them as a credit. So our interest revenue has a $140 credit. So we're going to debit our interest revenue for $140. And we're going to debit our service revenue for the same amount, $10,100. All right, so now that we got that established, that is our journal entry debit side. Now we need our credit side. And remember, we always close our revenues and expenses to the income summary account. And we're going to close them so that it's the same amount as whatever we just debited. So that's the amount, $10,240 to our income summary. Then we're going to close for our second step, close expense accounts. Let me come up here and change this to reflect that this was our first step. So our normal balances on our, and let me come over here and just do this little check mark, okay? I'm going to make this little brush a little bigger. And we've done our interest revenue, we've done our service revenue, okay? So now this is where we start. Remember, revenues and expenses. All the rest of these are going to be expenses on our trial balances. So what we need to do is we're going to debit our income summary for some amount. We don't know what it is yet. So we're going to start listing off our expenses: supplies expense, depreciation expense, equipment, salaries expense, and utility expense. Okay. And let's go ahead and indent those. All right. So we're going to close them with a credit because their normal balance is a debit. And we're going to credit them the same amount that's in their balance. So right now, supplies expense was at 100. So we're going to credit that for 100. Depreciation expense was 75 debit. We're going to credit that. And so on down the line. And then we're going to close these to the income summary for the amount that they all total. So our income summary account right now, if we were to make ourselves a little T account here. We would currently have a credit of 210,240 and a debit of 5575 there, right? So that is our T account looking thing over here. But our third step is to close the income summary. And remember, our income summary is a manifestation of the income statement. That's why it's called the income summary. It summarizes our income statement. Okay, and we've already done all those guys. So what we're going to do here is we are going to do a subtotal here, and we're going to take, whoops, well, how did I do that? Oh, I did the wrong bottom. Sorry, I really am kind of particular about my T accounts. I guess it's a weird nuance in me. Okay, so when we take our credit and subtract out our debit, if we have a negative amount, that means it's going to be a debit balance in the income summary. That's an income loss, a net loss. But if it's a credit, or if it's a positive number, it's a credit and it will be a net income. So we're going to have a credit balance here of 4,665. So to close our income summary, we need a debit of 4,665. Actually, I'm going to do this because I want to show our owners, OW, owners capital. Sorry about that. Okay. And we're going to just clear these out for now. All right. I'm just saving some time in a second. All right. So we're closing the income summary. And so we're going to be debiting the income summary for 4,665. And then we're going to be crediting the owners, OWNERS capital by the same amount. Okay. And this is showing us that we're moving the net income to the statement of owner's equity. So remember, our income summary is the income statement, and the owner's capital is the statement of owner's equity. So the last thing we're going to do is we're going to close the owner's withdrawals account. Oh, let me that indented. Okay, so our owner's withdrawals account has $100 and its normal balance is a debit. So we're going to credit the owner's withdrawals to close that out, and we're going to debit the owner's capital account. Oops. Okay, and that's it. You have these 4 steps. So let's look at our owner's capital account. In it, we had $20,000. We added our net income, and then we are going to reduce it by our withdrawals to come up with a new account balance. And forgive me my nuance. Okay, so we're going to take this, add our net income, and subtract our withdrawals for a total balance now of 24,565. And that's what's going to be reflected on our statement of owner's equity. So this is basically your summing up of how to do the journal entries for closing out your temporary accounts to the owner's capital account. If you have any questions, please let me know, and we'll see you in another video.